March was a turbulent month for the equity and the stock market, and most investment portfolio felt the ripples, and the S&P 500 ended the month down 4.6%, breaking its 3-month winning streak as the trade tension and the tariff war took the center stage. The most significant driver of this period is the United States imposition of the reciprocal tariff to key trading partners, triggering a sharp response across global markets and the rising concern about inflation, the supply chain, and the corporate future earnings. I started my investment journey last year November with less than £1,000, and I was hoping to reach 10 to 15,000 at my 1-year anniversary, and my investment portfolio went straight to red. And so far we are still relentless. We are still in the course and hoping possibly if we will hit our target by the end of 2025. So in this video we will be looking at my winning position, my losing positions, my total investment in the month of March, and what stocks I'm looking to buy next. My name is Francis, and in this channel we'll talk about everything personal finance and the stock market, and I also share and track my investment journey to help someone or encourage someone out there. Before we start the portfolio review, let's look at the major market drivers of the month of March. In the early March, the US government introduced 25% tariff on imported goods from Canada and Mexico, and an increased tariff of China goods from 65% now is 145%. While this policy might sound strategic and objective to some people, the economic side effect was immediate and far-reaching. Canada, China, and Mexico responded with a retaliatory tariff hitting US agricultural goods, vehicles, and consumer electronics. Despite the macro noise, some stocks in my portfolio has been performing really good. Like the Lloyds Bank was up 16.1%, and the Unilever was up 0.87%, and the iShares physical gold was up 4.60%. This shows the importance of diversification, especially in the uncertainty policy environment that we are in now, which in my last update I mentioned that I'm looking to add more positions to the iShares physical gold, which I'll show you later. And when you look at the portfolio, you see that all the stocks that has something to do with AI and semiconductor are really performing very bad. And on the flip side, without AI driven stocks, the S&P 500 are less valued. And if you're someone who is looking to go into AI or looking for a new career, I think AI is a very good thing to start, especially in this particular period, because when the boom starts, you will be part of the people that will gain the following the reciprocal trade, which have weighed heavily on investor sentiment, and companies who rely mainly on international trade, particularly within the industrial and technology sectors, underperformed. In my portfolio, this translates as a pullback in some companies. Like the Apple, it dropped by 22.60%, and the Meta dropped by 23.1%, and the Tesla drops by 36.36%, and the Nvidia, it drops by 13.1%, and Microsoft drops by 13.4%. The Oxford Biomedical, it drops by 24.46%. Most of these stocks are highly exposed to the global supply chain. For instance, Apple saw volatility as a result of the cost of components and the slowdown of demand from China, because Apple produced majority of their products from China, taking advantage of the low cost of material and the labor force. One area of concern still remains inflation, and the Federal Reserve latest updates FOMC meeting still reflects the anxiety over the rising price and pressure, which is fueled partly by the new tariff. While Fed keeps interest rates steady in March, which shows a cautious outlook, especially as tariff might lead to a high inflation on importation. Any unexpected turn or changes from the Fed can lead to a whole lot of pressure, especially on high growth sectors. The Invesco S&P 500 is down by 13.9% and the Vanguard S&P 500 is down by 12.94%. And when you consider other ETF that tracks the world, which is the Invesco FTSE All World, is down by 9.86%. and the Vanguard FTSE All World is down by 11.7%. My portfolio is not looking pretty good this moment, but with the latest news of President Donald Trump pausing the tariff for 90 days, the stock market, especially the S&P 500, rallied to the upsides with an increase of almost 9%. At the moment, my total losses is sitting at 12.3%, which is bad. The total money I invested in the stock market in the month of March is around £900, and my total invested cash in the stock market is around £4,300. So the total money, assuming I want to close all my position and accept those losses, like I want to sell my position, if I close that, it will be around £3,700, and my total deposit since I started investing is around £7,122. This is because I have uninvested cash of £2,800, which I use to set and auto invest weekly to help me stay on this course, and it still brings an daily interest of 4.75% to me, and I still have a dividend stocks which I have in my portfolio, and the whole profit add up to my portfolio. Like I said earlier, I am hoping to get my investments to 10 or 15,000 pounds at the end of this year, and my long-term plan is to get the total capital to 100,000 pounds, and I'm hoping that this is achievable, but I don't know how many years that will take me, but let's see. Looking ahead, I am monitoring some sectors like the automobile, the semiconductor, and the retail. And however, this short-term volatility is an opportunity for us to buy more stocks to take advantage of the low prices. And I'm also looking at some oversold consumer demand stocks, even a tech ETF and some tech individual stocks like the Microsoft. For me, is a long hold. I will continue to evaluate with any recent policy development and rebalance my portfolio to align with my risk tolerance and my return objective. And let me know if there's anything you want me to change, or if there's anything you want me to improve, and what are you doing with your own portfolio. And don't forget to like and subscribe to this channel. Thanks for watching, and I will see you all in the next video.